Guru, Head of Equity, Investment and Strategy at Julius Baer, now joining us. Mr. Rajguru, thank you so much for joining us here on ET Now. And first up, your thoughts on the current market setup. Nifty is at a fresh record high, but broader markets are still underperforming. Nifty Small Cap Index, for instance, is still down 11% from its record high. What kind of strategy would you recommend in this kind of a market setup? Is it best to keep some powder dry, and do you expect market to consolidate, at least in the short term?
Yeah, hi. Good afternoon. In fact, as you rightly said, if we just zoom out and look through, Indian markets has seen a reasonably good amount of consolidation. So practically, we are at the same level at which we were probably in September of 2024 at a Nifty level, and we are much lower on the mid cap and small cap level. And if I were to add to it a global layer, we have been a significant underperformer. And one of the key reason for this underperformance and consolidation has been the earnings growth, has been anemic for now 6 quarters in a row. Having said that, basis the steps taken by the government and by the Reserve Bank of India, we clearly believe that the earnings growth trajectory is going to change. So just to give you perspective, the earnings growth for last financial year for Nifty was around 5-6%. This year we will probably end at 7-8%. But we believe that from FY27 onwards, the earnings growth will be in double digit. We are expecting more than 15% plus in 27. So the earnings growth trajectory is going to go higher. So with that perspective, what we believe that this is the time to add into the Indian equities market, and this we have seen a good consolidation phase and time to add equity in the client's portfolio. That's our view.
Okay, Mr. Rajguru, point taken, and thanks for putting that into context. But as you say that now would be a good time to dip your toes into the market and start making fresh allocations, where would those good sectors or good places be? Some good avenues where investors should start, accumulating for the near to medium term.
Sure. Yeah. Hi. Good afternoon. We have to look through that. Which are the sectors where the earnings growth will be higher? So one sector which clearly stands out, are banking and financials. So as a sector, we believe that the earnings growth will be pretty strong for next 1 year or so. And within banks, while large cap banks will do well, but certain mid tier banks we believe will outperform in this market. So that's the one segment. The second segment where clearly the focus of government has been is consumption. So be it the measures which the government has taken by way of a tax cut, both on the direct side as well as on the indirect, that is GST front. So more money will be in the hands of the consumers. As well as the stimulus given by the RBI by way of rate cuts, which is monetary stimulus, which also means that you have to pay lower for your EMIs. So consumption as a basket, we believe will do well. And tactically, near term, the rural consumption will do well. But overall, structurally, we are positive on discretionary consumption. So that is the second basket, which we believe can do well over next couple of years. And finally, as a theme, what we like here is these sectors which has already witnessed consolidation and the overall competitive intensity has gone lower. So be it aviation, be it telecom, be it cement, these are some of the segments which at a overall thematic level we like, because that sector has seen a reasonably good amount of consolidation. So these are few themes and few sectors which we like from a medium to longer term perspective.
Okay, and any sector that you're completely avoiding at this point in time, either because the valuations are expensive or you expect the growth probably to slow down going forward?
As such, if you see, as I said, we have seen a reasonably good amount of time correction across sectors. Always there will be bouts of within sectors. There can always be stocks which one can avoid because probably it's baking in too much of a high amount of growth in that. But as a sector per se, but no, I would say, some of the sectors which probably would be, quoting at a very high valuations, wherein a lot of growth is baked into it. So some amount of say, EMS and all probably we would wait for better entry price. So it's not that we don't like that sector, but say some of the capital market intermediaries, EMS, we will wait for better entry points to get into that. So we like that sector, but probably not that comfortable with the current valuation at which they are trading.
Okay, on that note, Mr. Rajguru, we'll let you go. Thank you so much for your time.